What's going on, everyone? Happy Sunday, and I hope you're all enjoying your Labor Day weekend. My name's Obi, and welcome back to Courtside Financial. If you're new to the channel, make sure you hit that subscribe button so that you don't miss out on the next video. And also make sure you hit that like button because it really does go a long way in helping out the channel. So a lot of you guys have been requesting an update on Ayro stock since my last video. I made that video on July 13th when the stock was at $4.36. And I said at the time, if I do decide to buy it, I won't be buying it just quite yet. Since then, the stock ran up to $5.10. And from that point on, it's just been at a downtrend. Today, the stock sits at $2.80. And no one can really predict when the bottom is going to be or if there is going to be a bottom. So today we're going to get into the update and I'm going to give you guys my opinion on the stock. So I'm thinking that we're first going to recap the business for those of you who might be tuning in and aren't familiar with Ayro stock. And then second, I'm going to talk about how I would play it if I was invested. Because I never invested in Ayro. I already have enough exposure to EV with NIO being 50% of my portfolio. And I'm looking to add some Tesla. If you're not familiar with Ayro, they make low-speed electric vehicles for universities, corporate campuses, and general commercial use. Now, this is a Texas-based company, and the biggest positive, in my opinion, is that they have good market segmentation. Now, like we say all the time on this channel, the automotive industry is cutthroat and capital intensive. I mean, even Sony just made an EV, and I think it's a pretty cool EV at that, but guess what? They're not planning to produce it at scale. They're not planning to mass produce the vehicle, and that's because this is a very risky business and the competition is pretty fierce. Now back to Ayro's market segmentation, what I like about them is that they're not trying to go head to head with a company like Tesla. They've identified their own opportunity within the market over here. For just universities, there's somewhere north of 4,000 in America alone. So Ayro for the most part is going to be selling to universities and businesses. In my opinion, the Roni situation is what's really slowing Ayro down right now. They aren't really able to sell to their target markets at full capacity. So the Roni situation has definitely not been a catalyst for this company. And I mean, for most companies, it hasn't. Now, with that being said, Ayro's market cap is just under $70 million. So it's not a Google, it's not an Apple, it's nowhere close to those companies. It's a really small company, so it's going to be much more affected by these negative market trends. It's not necessarily the safest investment. Ayro's not profitable at the time. Investors invest in a company like this for the future growth potential on the belief that Ayro will be able to really ramp up and turn things around and one day be profitable. And then the early investors are likely to have bigger gains than someone who got on later. But you're also taking on more risk. Just last week we had a red period and we have yet to see if it's going to continue, but that also added to the downtrend that Ayro stock was already facing. With that being said, you shouldn't expect to make a lot of money in a company like this in a short period of time. I'm a long-term investor, so that's just the way that I look at stocks personally. So if I believed in Ayro's long-term growth potential, and I believe that the fundamentals for them to still have a lot of growth and survive this thing, and come out the other side positive in the future, then I would be looking at the share price right now as a discount. I wouldn't try to time the market and catch a falling knife and try to figure out the bottom. I would probably just dollar cost average. Now on the other side of that coin, if I didn't believe in Ayro, then I would cut losses and treat it as a lesson learned. Everybody loses money in the market. You just learn your lesson and you don't do the same stuff again. Some stocks are just a learning lesson. So overall, the Roni situation, in my opinion, is what's slowing this business model down. But in the future, the share price could prove to be at a discount at this specific point in time. So it all depends on how you look at it, and it depends on your beliefs and how much risk you're willing to take. That's going to be it for this video. Make sure you hit the like button. Make sure you hit the subscribe button and leave me a comment down below. I want to know what you think about Ayro stock. As always, thanks for watching.